Hello and welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's James Marley and I'm joined by James Garish from Market Matters and Junbei Liu from Tribeca. Now it's the end of the year, markets are getting the wobbles. We've had a bit of news around a new type of variant out there, tech stocks getting the wobbles. So we thought we might have a look at a few stocks that are doing it a bit tough and see if we can find a few diamonds in the rough. Junbei, I'm going to start with you. Tyro had a shocking start to the year, good middle, and then it's been sold off again since the AGM update. Is it a buy, hold or a sell?
Tyro is a hold for me at the moment. They have had a really tough update. It's partly because they didn't communicate properly in terms of the contract that they have with the large bank Bendigo in terms of margins and misunderstanding and all of that. Now, there also another reason for underperforming is because all the non-profitable tech have been sold off. So it's just the market going through a different phase at the moment. It's a hold because the earnings still doing pretty well. It's recovering from that whole pandemic lockdown and it's expected to grow significantly. So I think it's a hold. Okay,
James, Tyro, it has been a tough year. Buy, hold or sell?
It has been. It's a buy for me. I'd go one better than Junbei. I think what they saw in a couple of months ago around margin issues and the fact that the market believed they were very unlikely to meet their full year guidance, I think that'll prove to be transient. The total transaction value is still considerably increasing, very strongly. So for me, if you look out 12 months, it's a buy here.
Okay, Qantas. I'm hoping to go surfing in the Maldives next year. Buy, hold or sell?
It's a buy for me, James. I think one of these businesses that have made good use of the pandemic, and I don't say that lightly, obviously, management have taken a challenging period, worked with it and right-sized the business for the future. So they've done a whole bunch of things around their cost base. The domestic market has become a lot more rational. So for me, it's a buy, James.
Okay, Junbei, buy on Qantas. What do you buy, hold or sell?
It's definitely a buy. Share price has come off as the new variant sort of sending a bit of fear around. My view is that this company is going to make most of its high margin money around Australia, rather international travel, and that's well on track. And then the queues and the waiting list for in 1 year's time, the holiday travel is enormous. So this company is well leveraged to it. And as James said, they have cut the cost base, right-sized the cost base, and in the next 12-18 months, once we'll return to normal, border opens, it's going to deliver significant amount of return to shareholders. So it's definitely a buy.
Okay, great. Now 2020 was the year of the retailer. 2021's been a bit tougher for Harvey Norman. Buy, hold or a sell?
It's a hold. I'm sorry, I got two hold today. So Harvey Norman's a hold. I think currently the tough condition is that one is we had the lockdown, so affected first quarter this year. And as that reopened, things will look a bit better. However, there's a lot of supply chain issues at the moment. Can't get product and hence you can't sell it properly. And at the same time, the retailers were a big beneficiary of the lockdown, stay at home and buy online things. So for Harvey Norman, I think it's kind of in that neutral territory. Still great business, and I think it's well on track to deliver more capital return post the first half results. It's a neutral territory.
Okay. Gerry Harvey, hard one to keep down. Can we keep the share price down much longer? Buy, hold or a sell?
Yeah, it's a buy for me, James. I think the big tailwind for the retail sector, and I think Harvey Norman will be a beneficiary of it, is the high household savings rates. 300 billion in household savings accounts since the pandemic. That's 14% of GDP. That's a wall of money. Harvey Norman's trading on about 11 times. It's about 30% cheaper than JB Hi-Fi. So I think that discount is not warranted. It's a buy.
Okay. Now we've asked you to bring along something with quality but a depressed share price. Is there something that we can put in the Christmas stocking, something that's going to do well for us next year? But what have you got?
I missed the component about quality, but I've certainly got one that's been depressed over the last 12 months, and it's AGL Energy. It's down 53%. I think it's the fourth worst performing stock on the ASX 200 this year, and some of that drop is, a large portion of that drop is correct, but it now becomes an asset play. So trading around $5.50 a share, it's cheaper than its retail business. So that for me is a buy and will do better in 22 than it did in 21.
Okay, AGL for James. Junbei, have you got something that's been on the floor, been carted out this year, think can turn it around?
Absolutely. A2 is the name I'll name. I know it's a tough name and it certainly polarized the
I think
market.
it's competing with AGL for one of the worst 5 performing stocks of the year.
Infant formula, can't go wrong with infant formula. Look, A2 is a name that we liked many years ago. It's got a great brand and it has it has established distribution channel into Asia and got a business in the US and Australian market. It's got a good market position. Now, during the pandemic, just post-pandemic, they benefited. Well, they've been hurt by the pantry stocking. So the mothers in China, when pandemic first hit, they bought all the inventory possible, and now they couldn't. It's just taking 12, 18 months to really clear those inventory, and they're putting pressure on price, putting pressure on volume, and now the new CEO really just kitchen sink the earnings and everything. But the good thing is that the company doesn't have any debt. It's sitting with close to $600 million of cash. It's still got a great brand, and we're seeing green shoots in some of its distribution channels. So things are looking better, and we are heading into a period. We just had the Singles Day. We had a couple of those online events, and the data looking pretty positive. So pricing is up, volume's good. So green shoots looking promising, and it's not as expensive. Well, clearly much cheaper than what it was before, and the share price is still pretty much all-time low. So my view is that it's going to really recover in the next 12 months.
Okay. Well, James and June Bay have found 2 stocks from the dogs list that they're hoping are going to be darlings in 2022. I hope you enjoyed that show of Buy, Hold, Sell. And if you did, hit the subscribe button on YouTube because we've got heaps of cracking content coming to you over the Christmas and New Year period.